Hey traders, this is Michael coming to you with the post-market recap for Thursday, May 15th. And we're going to go over SPX option structure, kind of what we're looking for today heading into the opening with our pre-market trading plan, which that video is always posted in the morning, so make sure you check that out. And then how we use our intraday tools to identify that we're most likely looking at least a trend up day in a shorter term, and then some consolidation towards the afternoon. So looking at the trading view chart, this is a 5-minute chart with our trading view levels overlaid, full complex, and then our DEX and GEX transitions. The DEX transition is the blue box, the GEX transition is the white box. And then what we refer to as our drunken sailor range as the yellow box here. We headed into the morning talking about the transitions were going to be very important. If we opened inside the transitions, we were anticipating some choppiness type action until kind of the opening book cleared, opening range set. We got that quick push up, obviously, on the 5-minute chart, and we rejected right at the top of that GEX and DEX transition. It's always an area where we anticipate some sort of price reaction, whether we push right through or push through and fail, or we get a quick failure there. So there's an opportunity there to take trades if you wish. But within this overall transition, it's a choppiness area, so we usually use some caution until we get a directional move via our intraday tools or a break above the transition or below transition to get a better risk reward trade. So obviously we headed back up, second retest. We pushed right through that transition area, nice engulfing bar there, kind of 3 or 4 bars up there. This is where we're looking at to take a trade above the transition area for move up to the top of the drunken sailor range. So we were looking for, roughly 20, 30 points for the move through the high of the day to the top of the drunken sailor range, which was 5,900. And then we were looking basically to hold on to some of those contracts. We would like to trim and take some profit into this 5,900, which we identified obviously is an important round number and an important area where we might see some stalling, and then take some profit and then hold the rest of our position for a little bit higher move if that was going to happen for the day. So let's go ahead and jump into the morning SPX game plan that we had in the Discord this morning. We go through the same morning routine. We look at sentiment, structure, and trend. You'll notice that again with our pre-market video that I post. We start with our market trend model, and then we go on down through the option structure. So we'll go ahead and look at the SPX option structure really quickly. Call dominated, above and below spot price. That is bullish sentiment for the SPXA, which is our cruise ship. Those are larger term, longer term positioning via the longer term expiries. So institutional positioning. Everything was looking bullish on the SPXA, which again is institutional positioning, larger market players for a little bit more extended period of time. Heading into the SPXP, all expiries turned on. These are speedboat. Contracts turn over much more quickly. This is 0 DTE as well as weekly expiry. Call dominated, above and below spot price. I think you're seeing a theme here. And pullbacks to these key levels that we identify in the morning are opportunities to get involved in a call dominated positive gamma market environment. So obviously transitions are one of those areas. Round numbers would be those areas. And then if we're looking to trade 0 DTE, obviously a drunken sailor range that we identify. So heading on down, we talked about GEX ratio in the pre-market. This is basically put call ratio with a time component added, which is gamma. We talked about that it was dropping slightly, but not really out of the norm for a 20% move up than we've seen in the overall market. And then we headed into our SPXP, kind of our dissection of what we're going to do for the day and how we're going to lay out our trading plan. Call dominated, above and below spot price. Again, the theme across the board. So you should be looking to buy pullbacks into those key gamma delta levels. Transition area is very well defined. I love it when we have a confluence of the GEX and DEX transition on the upside. It's very easy for risk reward to identify where that area is, that if we push through, then most likely we're going to have a significant move to the upside. Again, doesn't happen all the time, but it provides us the best risk reward from that top of transition to the 5,900. And then we were still call dominated above that 5,900. So the opportunity for price appreciation was there. If we saw that with our intraday tools, you see the expected move outlined with the red. So obviously moving up through those areas and through to 5,950 could have been that area that you were targeting today. So obviously went over all of that. we'll head back to our intraday volume command. If you're familiar with this here, this is basically, these are centroids. This is the mass of where market participants are transacting volume via options market. So we'll go ahead and let this run, and then we'll start back over and we'll identify it. Obviously, towards the end of the day, we were trending up on the call and put centroids. So it's a trend up day. So you'll see the start here. We actually had crossing of the call and put centroid, but you see how quickly that call centroid started rising, right? So that means that out of the money call speculation is coming into the market, out of the money put speculation is not occurring, and we get that rapid appreciation to the upside. And then you see when we start moving through these round levels, obviously the top of transition was 5880, then we hit 5900, and then we continue to the upside. Some key components of that was out of the money call speculation coming in very rapidly. We saw that with the vol M command, and then we were talking about the charm that was occurring of the highest sensitivity levels that we go over in the morning also. And then we overlay that with our market trend model. We talked about that. We had a pullback. We were looking for this to pull back. And then if we're going to be bullish, we needed this to start crossing above the moving averages and start moving to the upside, which started occurring, roughly we started getting the positive slope around, 11:10, 11:15, and we started crossing those shorter term moving averages to the upside, which got us in motion to say, hey, there's opportunity for a trade here. Market participants, there's more calls or more buying than versus selling. And then you'll see that the new highs versus new lows was also showing that also. More stocks were being bought than sold. And then our filtered cumulative tick up here, which is plus 1,000, minus 1,000. Filtered tick orders started moving to the upside. So institutional players started coming in also, and then buying and moving to the upside. And then our cumulative tick here, again, just started crossing above zero. So again, this is a bullish state. So moving on to the trade we took for today, you can probably already figure it out. It was a move through the top of transition. We entered a position here. I'll flip over to the 2-minute chart if you're looking to scalp. Sorry about that. So move over to the 2-minute chart here. Top of transition was very well identified. So once we started moving through the top of transition, we took a position. We actually flagged very nicely. If you use any sort of TA, we had two kind of inside bars right there, and then another bullish engulfing that took out that high, and then moved directly right up to that 5,900, which is the top of the drunken sailor range. So we took a few contracts off there, and then we let the rest ride for the rest of the day up into here. And then we started taking our profits into that 59.25 level. We started seeing some stalling. The call slope started flattening pretty rapidly into for the 115, 120, 130 hour. So obviously the out of the money call speculation was starting to wane a little bit. So that gave us the indication that we probably should start taking a little bit more profit. And then you could have held towards the end of the day if you wish. But again, locking in those profits on the way up. And then when the signals start indicating that, hey, we might start to flatten out and consolidate, this is a good time to go ahead and get out of that trade, which is what we did for a couple nice wins for the day. So earlier on in the day, we tested the bottom of the transitions areas. Again, those are key areas that we like to watch. If we would have failed rapidly these bottom of the transition areas, then obviously our thesis would have changed. And if the market trend model would have started rolling over and our vol M command would have started pointing to the downside, then we would not have been as bullish or looking for an upside move as we were looking for today. So hopefully that helps everybody with the post-market recap. Make sure you check out the pre-market prep that I posted this morning. We had a nice thesis and game plan heading into the day. Make sure you join us at GammaEdge on x.com, and then check out our newsletter we send out every weekend. A significant amount of education that we produce for free, including our GammaEdge framework. So that's it for tonight. Everybody have a nice evening, and we'll see you tomorrow. Thanks.